Meanwhile, the total value and number of contracts traded on the AFEX commodities market for the week of 23rd to 29th of March went sunny side. The number of deals, the commodity index and the export index were in the red. For more, here is Michael Martin. Hello, Michael. Good morning. Good to see you again. So let's just start off the show with activities, the commodities on your exchange in the week under review.
Hi, Chimezie. Good morning. Thank you for having me once again. So as you can see from the table in front of you, we had a fair bit of market activity happen in the exchange over the course of the week, with the total value of transactions going up by 112% from around 0.97 billion to close the trading week at 2.06 billion naira. The total number of contracts traded also went up by 174% from around 41,000 contracts to close the trading week at more than 112,000 contracts. We however saw red to the tune of 25% on the number of deals traded on the contracts, falling from around 97 deals to close the trading week at just 73 deals. The ACI, which is the AFEX Commodities Index, also fell by 4.57% from around 400.85 to close the trading week at 382.53. The AFEX Export Index, which is the AEI, also fell ever so slightly by 0.38% from around 159.95 to close the trading week at 159.35. With regards to the volume of contracts traded on the exchange, if you look at the next table in front of you, it clearly delineates that maize, soybean, and sorghum were the only commodities that traded higher this week in comparison to the previous week. Cocoa and sesame traded little to no volume in the exchange, while all the other commodities under consideration traded less volume this week in comparison to the previous week. With regards to price trading on the exchange, we saw the top gainers being number one, sorghum, which gained 5.50% in the week under review, gaining 1,000 naira to close the trading week at 19,195 naira per contract. The only other gainer for the week was paddy rice, which gained 1.56%, gaining 303 naira in the contract value to close the trading week at 19,695. With regards to the losers for the week, we saw maize lose 9.87%, losing more than 2,000 naira in the contract value to close the trading week at 18,497 naira per contract. And then the only other loser for the week was ginger, which lost 0.75%. Losing 666 naira in the contract value to close the trading week at 87,862 naira per contract. And the only other asset under consideration is the fair trade exchange traded commodity, which is the FETC, which lost about 1.92% over the course of the week, losing 273 naira in the contract value to close the trading week at 13,962 naira. So that's by and large all of what happened on the commodities exchange over the course of the week. And like we always say, if you want to know more about the commodities market, you can always go to our website, which is www.afexnigeria.com. And at this point, if you're not invested in the commodities market, I honestly don't know what you're doing. So if you want to get started investing in the commodities market, please download our COMEX app on the Apple and Google Play Store and get started making some money, please.
Mm-hmm. I guess we'll have to give that a shot.
I like to make money, so I'll take your advice. Anyway, maize fell by almost 10%. Huge drop there. Is there any particular reason why?
So maize dropping by almost 10%. We're seeing that as more of an extension of the grain stabilization program that had happened in the month of February. And maize in particular, I'd enjoyed months of bullish momentum, and we see this as a bit of a retracement before prices continue higher. So it's nothing out of the ordinary for maize.
So sorghum is finally picking up some steam. Are we seeing the introduction of major players in that market?
Essentially, yes. Usually, sorghum prices tend to move when you see the introduction of major players like breweries and people who brew alcohol in general. And I think, as I commented on also last week, we have a few festivities that are coming up. Easter is this weekend, and then we also have the Ramadan celebration also coming up. If I didn't know any better, I would say that people are inclined to drink and want to get drunk. So we're essentially seeing the price of sorghum go up by extension because it's a major produce. It's a major commodity used in the brewing of alcohol. So.
All right. On a much broader note, when analyzing the commodities market, what are the fundamentals to look out for in terms of market signals?
So when you're analyzing the commodities market in terms of market signals, there are a few things that you want to pay attention to, right? And this is for anybody, whether or not you're a retail investor or whether or not you're even an institutional investor, right? So first of all, you want to pay attention to price. Price is the most important indicator that you're trying to look at, that you should be evaluating whether or not it's cheap or whether or not it's expensive, whether or not it's overvalued or undervalued. Another indicator or market signal that you always want to pay attention to is volume, right? So what are the time periods when you tend to see large volumes in the market, and then what are the time periods when you tend to see low volumes in the market? And we've discussed this at length at some point in time during the course of this interview, how we tend to make the assertion that for grains in general, you tend to see more volume come into the market during harvest periods of October and November, and maybe even some part of December, and then you tend to see that volume dwindle over time. The only other market signal that you would also be considering would probably also be the general market sentiment, for one. And that's to say, for each of the commodities that you want to invest in, whether or not that's maize, soybean, sorghum, or paddy rice, who are the major players in this? Who are the major players in this commodity, and when do they come into the market? The capital flows, when does that happen? Because you also tend to see, like we're seeing with, like we saw with sorghum during the course of this week, that price tends to move upwards when you see those players come into the market. And I think, lastly, which I think this is more of a broader macro framework, is you want to look at the general macroeconomic environment. And when it comes to the commodities market, the two major market indicators that you're looking at is, number one, you're looking at the inflation rate, and then you're also looking at, if I'm not completely, I think you might also want to be looking at the interest rate and how it also influences the commodities market. And so the inflation rate and the interest rate, those are the macroeconomic indicators that you would be looking at.
All right, Martin. Okay, away from those numbers, AFEX's input financing program has been running for over 4 years now, showing growth year on year in the number of farmers reached with the program who are enabled to access quality inputs, with fertilizers making up a huge portion of the basket. Can you give us an overview of fertilizer distribution and usage in Nigeria before the introduction of the PFI? And, of course, 5 years after its introduction?
So if you evaluate the way the industry was structured before the Presidential Fertilizer Initiative, a significant portion, if not the entirety, of all the fertilizers that were used by smallholder farmers, a large proportion of them were imported from abroad, right? And if you look at what has happened, particularly with the exchange rate also within that same time period, you would argue that the Presidential Fertilizer Initiative was a brilliant initiative, right? So if you look at how the Naira has been devalued, between that same time period, right? What that would have essentially led to in the ecosystem was a skyrocketing of the cost of fertilizers for not just for the smallholder farmers, but also for every single player within the fertilizer value chain. But more so speaking to the Presidential Fertilizer Initiative, right? So if you look at the way the initiative was structured, it was more of a policy pillar during the agriculture promotion program, right? And the program was sort of structured, right, in order to drive the utilization of local domestic blending companies, right? And the reason why that was put into place was essentially to increase production on one hand, and also to increase access and use of locally blended, domestically blended fertilizers, right? And if you look at the way the scheme was structured, right, it was structured to stand on 3 legs. The first of which was, number one, procurement, the second of which was blending, and the third of which was distributorship, right? So if you look at what has happened, so the first of which is the ability to procure these raw materials both from home and abroad, because some of the raw materials are locally available, for example, limestone. Second of which is to say, how then do we convert this locally, this sourced raw materials into the NPK fertilizers by using blending services by these domestic blending companies? And then thirdly is also the distributorship, right, of how we're going to get these finished products, right, from where they're being locally blended to the end user, which is the smallholder farmer. So what has happened in the industry as a result of that is that, okay?
Go ahead.
So what has happened, what you've seen happen to the industry as a result of that is the fact that local production has gone up by approximately 400%, and local consumption has also gone up by 39% within that same time period. And these are figures as reported in the year 2019. So by and large, you can argue that the Presidential Fertilizer Initiative has been extremely successful. And not just in that regard, it has also been successful in terms of formalizing the interaction right between all the players within the fertilizer value chain, both from a production standpoint to a distribution standpoint, and also to the end user, which is the smallholder farmer, and thereby increasing his productivity.
All right, Martin. So the president recently reviewed the progress of the Presidential Fertilizer Initiative, PFI. And of these decisions from the review was the restructuring of the initiative to ensure it was fully led by the private sector. How will that be a benefit to the commodities ecosystem?
So when you evaluate the government's role, and this is even regardless of any industries that you're evaluating, right? The government's role has always been about creating a sustainable ecosystem, right, that allows different players, right, to come and play essentially, right? So what has happened as a result of this new policy initiative is the fact that you're seeing the introduction of a lot of private sector players, and you're seeing a lot of them starting new businesses in the fertilizer value chain. So even before the Presidential Fertilizer Initiative, we had maybe just 3 to 4 different fertilizer blending facilities in the country. Now there are almost 30. As also a result of that initiative, we're also seeing a transition away from a service-led blending fee revenue models for all these blending facilities to a margin-based revenue model, right? So what that essentially means is that the blending facilities or the blending companies now, they're responsible for the cost of production, they're responsible for sourcing these raw materials, and then they can now design their own business systems to earn some sort of significant margin on the finished products, right? And if you look at what has happened as a result of that initiative alone, we have seen, number one, we are seeing increased competition within the blending facility, with blending facilities in general, right? You're seeing a lot more players within that same value chain, which of course essentially also leads to a reduction in the price of the end product, which is fertilizer. Secondly, you're also seeing an increase in production of locally blended fertilizer as a result of the introduction of a lot of players within that value chain. And lastly, which I think is also important from a broader economic standpoint, is also to say, with the introduction of a lot more private sector players, you're seeing an increase in employment at different levels or at different segments of the value chain. So that has been the result.
All right, so with the yearly input disbursement program that AFEX has run for over 5 years, what has been the growth and the responses from smallholder farmers? And then what is the 2021 AFEX input disbursement program aiming towards this year?
Oh, thank you very much for that question, because I've been waiting for it. So our input disbursement program has been massively successful. And when I mean massively successful, I mean massively successful. I mean, we started in the year 2015 with just approximately 800 farmers. Last year alone, we did more than 35,000 farmers, right? That's a growth of more than 35,000%, right? It's significant, 4,500% rather, right? And if you look at what has happened in that sector, we have seen, as a company, we have seen significant growth in the number of farmers that we're able to reach on a yearly basis, go from year on year, right? So like I said, last year we were able to reach 35,000 farmers, but even more so beyond that, because for us at AFEX Commodities Exchange, our value is the ability to play across the different parts of the value chain, both from an access to finance standpoint and also in terms of providing quality inputs to the farmers in a timely manner. And I accentuate the word timely, right? Because it's not just important for you to be able to provide inputs to farmers. It's important for you to be able to provide it to them in a timely manner, right? And we also have an extensive warehouse networks that allows us to provide last mile delivery, right, to the smallholder farmers. And even beyond that, right, we also provide extension services to all the smallholder farmers that ensures that they can significantly increase their productivity and increase their livelihood. I mean, we recently did an impact report at the company, and it sufficiently demonstrated that farmers that have worked with AFEX Commodities Exchange for the better part of 2 or 3 years have significantly seen an increase in their income and their livelihood. So if we're talking about the success of the program, I mean, we also even have a 98% loan repayment rate. So, I mean, if anything at all, I think people should be lining up to give us money for our, for our input disbursement program. Our plans for 2021 is to reach more than 150,000 farmers. And I mean, that's massive on any scale. And we believe that with the current people that we have on the exchange and with the current warehouse networks that we have, with our partners in the capital market, I mean, that number is not a challenge to us.
Oh, well, Martin, I don't know if Ladi and I have that kind of money to
Take my money.
give them. But maybe Ladi can actually offer some Bitcoin there. All right, thank you,
We don't
Michael.
mind.
Oh, yeah, I know. Thank you for your time, Michael. We'll take a moment now. We'll be back.